All right, everyone, gonna get things started. Thank you so much for joining. We're really excited for the demo day that we have prepared today. Um, if you've attended any of these events before, you know I like to do a very short introduction before kicking things off. Um, this month we have four awesome founders from the Viaka Network who are building in FinTech. And you'll hear from the founders in a sec. They'll be giving full pitches. So I won't go into too much depth introducing them. I do want to introduce the feedback panel of four investors that we have. So excited to have them here. Thank you all for making the time to participate in this. So at the bottom of the screen here is the investor panel. We have Tariq Muhammad, who's a serial fintech entrepreneur from the Middle East. He's now building Hyphen Labs here in the US. Jermin Bouchnak is Associate Director and Egypt Operations Manager for MEVP, which is a Middle East-focused venture capital firm investing in early and growth stages of innovative technology companies. Sachit Barma is an investor with Plus VC, venture capital firm focused from seed to Series A investments, both in the MENA region and its diaspora. And Fateh Naisi is the Associate Director of Flat Six Labs, which is the MENA region's leading seed and early stage venture capital firm. And they also run a bunch of super renowned investment and acceleration programs throughout the region. So really excited to have them here. Huge thank you once again for all of you for sharing your time with us. Real quick, for those that don't know much about the Viaka Network yet, it's a digital community for investors, operators, builders, founders with ties to the MENA region. Among other things, we have a Slack workspace, virtual events like this one, as well as educational or more informational webinars. We also have virtual and in-person networking events. Actually, later today here in Boston, we have a happy hour at the Silicon Valley Bank office. So it's a big day for Viaka. And we're also in the process of launching a fractional service providers platform targeted or directed at members of our network who are looking to connect with vetted services of that type. This is all free at the moment, and love for anyone in the audience to join if you're not currently a member. We're just over 350 members, and we were talking about even in this panel how we're covering all time zones from California through to Dubai and even Pakistan. So we'd love to have you. Feel free to just head to viaka.net/the Viaka Network to learn more and sign up. And also, I'd be remiss if I didn't thank our community partner, TechWadi. TechWadi is, I would say, the leading nonprofit organization focused on the MENA diaspora, particularly here in North America. I'm personally also on the operating board for TechWadi. The image here is from our annual forum, which we held last year in the Bay Area. We had over 300 attendees, really spanning all walks of the tech world. And we're getting ready to announce our annual forum this year. So stay tuned for that announcement. Check us out at techwadi.org for more information. And that's about it on the introduction side for me. Just a quick note on the format. So each pitch, all things considered, is going to last about 20 minutes. We'll have the founder present for the first 8 to 10 minutes, then open up to questions and feedback from the investors. And then if we have any time, we can also cover any questions posted in the chat from the audience. And I will be keeping time and posting 2-minute warnings for each of these sections. That's about it for me. So I'm really excited to turn it over to Aki for our first pitch from DLC Link. And you have the order of things here on the screen as well. So let me stop sharing. And Aki, I think you should have already co-host access. So you can...
I don't yet.
Oh, you're right.
Maybe try.
There you go.
Oh, there we go. All right. Salam, everybody. Obviously, I am not from the Middle East, but I did live in Abu Dhabi for a while, and we're actively building relationships over there and in Dubai as well. So thank you all for the time and attention. I'm actually working on my second startup, DLC Link. My first was an AI company I led for 8 years, and here we're enabling safe lending and finance on Bitcoin. So, why Bitcoin and why this idea? Well, despite the growing popularity of other crypto, Bitcoin still remains the undisputed heavyweight champion of the crypto market. It's the most well-known, the most secure, and the most capitalized, with over 500 billion in market cap. But it has a major limitation. It does not support smart contracts, and Bitcoin isn't natively interoperable with other chains like Ethereum. That means that to use Bitcoin on other chains, users have to resort to wrapping or bridging, both of which pose significant risks. First, wrapping. When you wrap a token, the user sends their Bitcoin to a custodian who keeps it in a vault and issues another token to use on other chains. However, if the custodian turns out to be fraudulent or makes a mistake, the Bitcoin can be lost forever. Bridging, on the other hand, involves pooling Bitcoin with smart contracts, but if the bridge validator gets hacked, the entire pool could be drained. And so these risks are not just theoretical. We've seen this play out recently with FTX, Ronin, and a number of bridges that are on this slide. In fact, hacks and custodial errors have resulted in over $140 billion in losses in recent years. This is where discrete log contracts, or DLCs, come in. DLCs were invented at MIT 4 years ago by the co-creator of the Lightning Network, but they only became feasible recently with Bitcoin's Taproot upgrade. With DLCs, users can lock Bitcoin into a multi-sig deposit account on Bitcoin chain. From there, they can move it conditionally using inputs from any DeFi app. For example, a user can deposit Bitcoin on the Bitcoin chain, take a loan in a stable coin on Ethereum, and then ask that loan to generate a return. If borrower defaults, liquidation is triggered automatically. At DLC Link, we provide a full platform that lets apps on any chain use native Bitcoin. We provide the wallet integrations, attestation service, smart contracts, and implementation support. In return, we charge an escrow fee, currently 50 basis points on the Bitcoin that is locked. We have 5 paying customers, 8 proposals, and over 80 pilots in the pipeline. We also have a distribution partnership with Chainlink, an industry leader, that allows them to co-sell our solution. But we're not just connecting Bitcoin to a multi-chain world, we're creating a network effect. In crypto, Bitcoin is considered pristine collateral. And so every chain wants to bring in native Bitcoin liquidity, which creates incredible demand for services cross-chain. With our first mover advantage, we're positioned to become the dominant Bitcoin escrow provider in crypto. And then as Bitcoin and Ethereum continue to grow, our market will expand into the multiple trillions of dollars. It's hard to build all of this the right way, but the good news is it's not my first rodeo. 8 years ago, I invented a way to use AI to optimize the content marketing industry. The company MarketMuse that I founded became the market leader and revolutionized its space. To build this project, I'm joined by my co-founder Jesse, an engineering leader from Twitter, and advisors from Chainlink, TBTC, and Goldman Sachs. We've recently announced our alpha on Ethereum in collaboration with a platform called Arcade XYZ. Our announcement resonated very well with the audience, and we got over 12,000 views on Twitter. This alpha version allows users to lock Bitcoin on-chain to take a loan in either USDC or Ethereum. And it's the first step in bridging the gap between Bitcoin and Ethereum without using a bridge. We've raised over $1 million to date, and we're in the process of raising an additional $750K. Some of our existing investors include Kieran Flanagan, who's a Sequoia Scout, Charlie Songhurst, who is the former head of strategy at Microsoft, and 8 venture capital funds. We're raising on a 15 million post-money safe, and we issue a token warrant. At the moment, we don't have plans to launch a token, but that could change as our company evolves. So join us as we safely connect $500 billion of Bitcoin capital to the rest of the crypto world. Connect with me on Telegram or email me for more information. Thank you.
Awesome. Thank you, Aki. Well on time as well, which is somewhat unusual. I will turn things over to our investor panel and pin them as well. So investors, feel free to fire any questions away.
Yeah, I will start. Hi, Aki. Thank you so much for the presentation. It was amazing. Just a quick question. Who is a typical customer for this? Is it B2B or B2C? And if it's B2B, are we talking mostly about custodians, like if they are interested in staking and you will facilitate this, or you will be the custodian and the facilitator of this? Thank you.
Yeah, great questions, and thank you, clarifying questions. So we are B2B. We plug into protocols, custodians, bridges, companies like Chainlink that are providing services for those companies, and we enable this on-chain Bitcoin deposit. So for example, one of the partners we're evolving a relationship with is BitGo, which is the leading custodian in the kind of Bitcoin industry. But everything that BitGo does is custodial. You have to send your Bitcoin to BitGo. And for example, they cannot give you a loan if you don't send them your Bitcoin, which a lot of companies are reluctant to do. So we're basically enabling Bitcoin deposits, on-chain, safe Bitcoin deposits for custodians and bridges that do this today, but we're enabling in a safer way. And then for protocols like Ondo or Clearloop, where they're already able to give you an investment return or give you a service on crypto, usually those don't support Bitcoin. They support Ethereum. So for those protocols, we're enabling Bitcoin deposits, which can more than double, or in some cases 5x the addressable market that those protocols work in. So it really benefits both sides, both the protocol that can now take Bitcoin deposits.
Yeah, from that perspective, so I imagine like you're mostly like staking tool for those whatever business it is, right? You're facilitating Bitcoin staking, right?
Basically, yeah, we're facilitating, that's right, the ability to earn a yield while you're holding Bitcoin, because today there is no yield on Bitcoin.
Hi, Aki. Thank you for the presentation. Great fun and quite on time, like Henny mentioned. So I had a bit of a question regarding the revenue model. So how do you charge your customer? What's your basic revenue model?
Yeah. I gave the simplified, but it's much simplified, so I'll give you the full version. So we do implementation consulting where we charge by the hour. We have a monthly subscription rate where we're supporting this Bitcoin deposit feature at our customers. We're doing maintenance and account management and just ongoing support, kind of like how a Stripe or something, you might pay a monthly fee, or like a recurring, like a billing platform. And then the variable fee is an escrow fee that is basically the upside comes in on the variable fee, where we take a percentage of the revenue. It's a fee share with the platform. So if the customer earns 4% APY, then we take 0.5% as the charge for supplying that liquidity.
Okay. And you charge that from the business behind, or from the customer himself?
Yeah, that is from the business. And this is kind of how to also the earlier question about staking, this is how the staking business actually works, is when you deposit crypto and you earn a 4% yield, actually that strategy actually earns a 5% yield. And then the staking protocol invisibly takes 1%. And you just basically make your choice on that. In the same way, today these Bitcoin yields are 0%. Non-custodial Bitcoin, you either use a custodian or you don't earn anything. And so now you can earn a 3.5%, and it's great for the protocol and it's great for the customer.
Okay, great. Thank you.
Thanks, Aki. I actually thought it was a great pitch, not too wordy, not too jargony either. Great tempo even. Now, there are two things I want to mention here. Firstly, I would have liked to see, when you mentioned the fundraising at the end, I would have liked to see the user proceeds. Really, where you go from here. So I know that you're launching your alpha test now, but where is that institutional money going to go, right? So the user proceeds, the go-to-market strategy, which we talked about a little now. So that's one. Secondly, thinking a little ahead, at what volumes, because as I understand, and as you just mentioned, your revenue model hinges on the escrow fee, right? So at what
Yes.
volumes do you break even? Because it is contingent on volumes, right?
That's right. Yeah, on $10 million of Bitcoin per month, we break even, assuming that same escrow fee. But some of our deals are much larger. So, for example, Foundry Digital, the largest Bitcoin mining pool in the world, we're looking at a project where even a 1%, they want to provide loans to the miners. So miners using Foundry's pool can just take loans from within their platform. Even a 1% adoption of that would generate $1 million a year for us in escrow fees. So it's more like going to be more of a 10 to 25% adoption, I think. So it's definitely a large, deal focused. The upside comes in from these large engagements.
Okay. All right.
Thank you, Aki, for the presentation. Two simple questions that I have for you. The first one is about the markets that you are targeting, knowing that there are some regulations in some markets that kind of forbid Bitcoin. And then the second question would be regarding your gross profit since you started operating.
Yeah, I'm very glad you brought that up, and thanks for bringing that up. So, due to recent events in the US, it's become kind of more sensitive to be here, which is why I've started partnering, especially in the MENA region more. The business that we do, so I live in New York, but the business that we do, I am not at risk from a regulation standpoint, because we make software that let people lock up their own money with DeFi protocols. Because we are not an escrow and because we never hold the funds or have anything to do with the funds, that's a good part of we're never money, we don't need licensing. However, our customers do. And so we work with CeFi groups as well, like Galaxy and Coinbase, and they're exploring, of course, their geographic strategies. So it impacts the industry. Luckily, it does not impact us. And also because we don't have a token and we don't have any short-term plans to have a token, that also helps from that standpoint. Our gross profit, we've mostly basically broken even on the funding raised. However, we're actually now, I'm really glad, Jess, we're now in a position where we see that path to cash flow break even. We actually just closed another deal this morning. And over the last few even weeks with ordinals, and there are a lot of assets being built on Bitcoin. There's also lending of those as well. And so we got about most of I mentioned 8 proposals that are at proposal stage. Most of them actually came through in the last 6 weeks. And I think we have a path. This slide even said we're raising 750, but I think we can even get to break even on 250 or let's say conservatively 500K. And so that's really, that's really nice to see, because it is hard in crypto to kind of, make a buck these days because of these reasons. But we have a lot of demand from protocols. We're probably meeting about 1 or 2 prospects a day, every work day. So we generate about 5 to 10 qualified leads every week, and then we guide them through the sales process. And for I mentioned, even outside of the variable fee, we charge this monthly subscription. That's 1,000 a month to 2,500. And so if we sell 10 of those, we break even on just a monthly subscription with the support, without any of the upside. So business has been booming as of recently.
I have one question also regarding the sales cycle. So how long does it take you to actually close a deal from that pipeline?
Yes, usually about 3 months or less. If it's an enterprise, I'll put the CFI and Foundry and the large companies to the side because those we have a strong partnership with Chainlink and they often, help with an Aave or something like that. So those are much longer. But for a typical protocol, the one that we closed today, we met them about 2 months ago. I actually met them 1 month ago in person, and then they realized that this is something they want to do. And the reason for that is we're the only company that has software that can implement these DLCs into platforms. This is a very new technology, and we are the only ones. We have a library that we've plugged into several wallets, and whoever, you need the wallet to do this. And so the only way these protocols can use this functionality right now is if they work through us and they use those wallets.
Awesome. Aki, thank you so much. And yeah, congrats. Sharif, before you start, just saying thank you to everyone for joining. Really a pleasure to have you all, and thank you to everyone who pitched. I'm going to just drop a link to the Viaka Network application as well in the Zoom chat. As I said at the beginning, would love to invite everyone who's not yet part of the network to sign up. And with that, Sharif, take us home.
Yeah, I just want to make sure everybody can see my screen.
Yes.
Okay, so yeah, I'm the last company of the day, and I've been preceded by 3 great companies. So I'm trying to keep up the bar for everybody. However, it's actually interesting that the 3 companies that have been presenting so far are actually possible customers that we can actually deal with. So that's actually a good thing. So I'm here to talk a bit about my journey with Naya. And again, Naya has been an interesting journey so far. I'm going to start off by a little bit about myself. I'm a 20-year-old plus tech veteran. I've started, again, a business in the consultancy and the service providing industry. It has been up and running for almost 20 years now, globally, across 3 different offices in Egypt, UAE, and Southern California, with, again, focus on software engineering and development, enterprise infrastructure, and data projects, where I launched projects globally with Google, Apple, MIT, FIFA, and the likes. And this is actually what actually got my journey with Naya to start late last year. Again, my journey with Naya had started through my experience with financial institutions that I've worked with through my service providing technology service providing business, where it started initially as an open finance platform. This was the initial goal and the initial vision about Naya. However, as we got into more market research, interviewing more customers and more partners that we have been starting to work with, it was very clear that the majority of the companies that we've been working with, especially in companies with high volume transactions such as FinTechs, MBFIs, and financial institutions, e-commerce, they all are sharing very similar pains and challenges in managing their data, especially in reconciliation, settlement, being able to give on-time insights to what the data might be actually valuable for. And as we go deep into that study and then the interviews, it has been apparent that this is being a crucial pain across the industry, regardless if it is for an early stage FinTech or an established financial institution. And this is where when we decided to pivot from initial vision into that core opportunity that we've been focusing on. And we started exploring more into that opportunity. We've found that there's a lot of problems for those kind of companies in terms of grappling with large number of data sources, complex reconciliation. There's a lot of data silos. Depends on the business model for that FinTech, if it's going to be a payment processor provider or a BNPL or a lending company. Those companies have been facing a lot of those problems continuously, leading into a lot of waste in time, waste opportunities in terms of cost, or discrepancies that, again, lead into a lot of money losses. And this has been a very common pattern that we've seen across the different types of companies that we've been working with and instituting. So as everybody in the room would probably know, the FinTech global market is a hugely a growing market with almost $500 billion worth that is growing. Same goes for the enterprise data management market that has been driven a lot, not just by things like COVID, but the need for more automation, improved efficiency, better risk management, and deeper insights into what kind of the data means. And then the huge and explosive growth in data volume has been a lot to work with. And this is where we actually believe that there's a huge potential of efficiency and getting more into that space. We have broken down our approach for Naya into 5 components. One, by defining a single source of truth for that data, more automated workflows, AI-based insights, being more focused onto compliance and data security. And this is our again, our approach. It should be here. So Naya is a financial data platform as its essence. It's designed to empower businesses with high volume transactions such as fintechs, financial institutions, and e-commerce platforms to provide a secure and a scalable platform that simplifies financial data management. We want businesses to focus on their core value and core business model rather than focusing on those automation and reconciliation of data, workflows, and insights. We've broken the platform into 4 main products. One is our unified ledger, which is Ledger Pulse. It's a unified, secure, and customizable ledger that helps business record and manage the transactions in real time. We have an AI-based reconciliation engine that sits on top of the Ledger product that is responsible for matching reconciliation of data across different sources, which can be a payment gateways, payment providers, e-commerce sales, CRMs, ERPs, and offline data such as bank statements and CSV files. And then we have our Data Flow Plus, which is, again, a marketplace of integrations with data sources. So the companies would not be investing time, would not be investing a lot of investment into the integration with the various data sources, again, such as payment gateways, processors, banks, and other data sources. And then on top of all of this is our AI Insights engine that, again, is required not to just to do reporting, but to do predictive analysis into what this data might mean consolidated. You take, for example, a FinTech that is working in the BNPL space, sourcing different merchants and different promotions and different values, and they're sourcing all the different data into our ledger. They would be able to query this data to understand more in the future if they need to run a specific promo through a specific merchant, how they can increase their EBIT or their profit margins for a specific campaign based on the data that they're having. Naya is, again, this is what we felt at this point. Why is it important to have such a solution, such a platform at this point in time? Again, the simplification of data management. One platform streamlines the entire workflow of complex integrations, lowering the constant time for companies to, again, build and innovate. Building that ledger and reconciliation engine alone for early stage fintechs is a complex process that would take a lot of time and effort and money. So it's either they build that in-house or they source a ready-made technology that is not actually purpose-built for this kind of workflows and business. So they have to tailor and customize. And the automation of the workflows in terms of financial workflows, better decision-making, and having a unified source of truth that would eliminate the data silos that financial companies actually deal with right now. We are having 2 offerings in terms of our revenue model. We are having an enterprise SaaS model that is steered based on the usage and the scale of the customer. And then we have an enterprise licensing model for customers who are, again, they're bound by certain regulatory and compliance requirements in order to, again, either launch it through a private cloud or on-prem kind of implementation. So we can cater for both early stage all the way into established enterprises, customers. In terms of competition, we do cross path with a different set of markets. We do cross path with the ERPs, the established ones, and we do cross path with a lot of the core banking platforms. So again, the idea is that these companies, although we're taking a punch at a heavyweight champions here, but they are not built, they're not purpose built for this specific kind of business and use case. This is why we believe we do stand out in terms of our offering with those companies and those products, like the likes of Oracle NetSuite, the Apache FanCart, Mifos, Temenos, Backbase, and the others as well. And we believe we have a very unique value proposition in terms of technology and in terms of value proposition that would help those companies. As I said, we've been in this journey for quite almost since late last year. We've been taking a different approach in the way we're building and innovating. We're trying to identify a lot of the product market fit pre-building that technology. This is why we're working closely with customers as we build our MVP and version 0 that we're actually working in right now. So we have about maybe 2 payment providers and a couple of BNPL providers already that we have on board that we're actually working with in order to tackle their problems using our approach. We're expected to launch at the second half with the core products of the ledger and the reconciliation as we go into adding more into the integration hub, the data flow, and then as we go into our roadmap. Again, our mission has been very clear and very straightforward, is empowering businesses to be scalable, efficient, insightful with their financial data as they grow and as we help them grow into this. We have been blessed with different seasoned advisors and investors that has been supporting us early on across different sets of expertise, from enterprise, NBFIs to fintechs and investment. And those have been supporting us across our journey for Naya. And this is how I try to conclude, giving a bit of bag of time for people to jump in and ask.
Thanks a lot, Sharif, for the presentation. I had maybe like 2 comments initially, and then a couple of questions.
Sure.
So the first comment would have been great to have some kind of a visualization. I know you're still in the development process of the product, but some kind of the user journey or the different angles that you tackle, how would it look like from a visual perspective? That would have helped a lot to kind of grasp deeper details about the product itself. The second thing is that I know you're offering multiple solutions or kind of upselling options for your customers. It would be great to understand more what kind of the core offering that you're starting with and the other upselling. Are they kind of milestones, or it depends on the type of customer? Because what your core focus is initially, I know they all fall into your vision, but how would that be segmented down the road? So this is the first question, and then maybe I can go to the other questions.
That's a great feedback and a great question. However, they're not separate, or they're not upsell kind of propositions. They're actually one in the same. However, there are 4 different modules that are focusing on 4 different aspects of the platform itself. However, they are dependent on each other. So this is why there is a core feature, which is the unified ledger, that is the base of everything. This is where data is being housed, data is being sourced from different financial sources or data sources. And on top of that, there's the integration hub, which connects to the different types of data sources for fintechs and financial institutions. And then the insights and the engine. They're upselling, but they're part of the roadmap. However, as we start, the core component is the ledger technology itself, which is, again, it's a very unique decentralized ledger technology that we're working on in order to facilitate certain features that is required by these companies. And then it's part of the roadmap. All the other components are being built as very, let's say, early stage, but then as part of their roadmap as well to advance into full suite of products. This is where part of the roadmap is. But again, it's a single complete platform based on the 4 components.
Okay, great. And one more question. So regarding the size of the company, so you mentioned quite a kind of open target segment on that front. You mentioned a bit on the fintech, so I'm assuming kind of that's the initial target maybe, but would love to get a sense of who is your target segment initially and how do you plan to scale that down the road?
So the internal vision that we have is covering pretty much any company with high volume transactions. So this includes fintechs, financial institutions, e-commerce, retail, construction, FMCGs, all of this. However, our GTM at the moment, the very first is we're focused on fintechs. Again, those because again the nature of the business, either early stage or established, they are again they're cloud. I don't want to say cloud native, but they're digital native. So they will fit right into our target segment of customers. We have interest from established customers as well as early stage that are facing these problems. We have two different examples. One that just launched this month. They had an announcement already, and they are facing this specific problem. While another fintech that's been around for the last maybe 6-7 years will have operations over 50 countries, and they're facing the same problem. So our target segment, we're focused on the fintechs early as the first target segment, specifically in UAE and KSA as the primary markets that we're focused on, and then we're taking it on there. We're not focused on other markets or other vertical markets, just to be more specific as we go. However, we do serve a bigger vision in terms of our target audience.
Okay. And how far are you in the development of the product?
We are anticipating to be again having the ledger, which is the core component, within the next 3 to 6 months, in order to have it with the 2 pilots that we've already engaged with.
Okay. And when it comes to the sales cycle, so I understand since the product is still kind of being developed, so you're still kind of to explore that. Initially focusing on fintech, so far the 2 that you've mentioned, how long did it take you? How was the process?
Well, I've been selling enterprise software for almost 20 years, so I have quite a feeler for the cycle itself. There are two different types of customers here. The early stage ones will be able to be onboarded again on the SaaS model with pretty much under an hour. The idea of that ledger technology that can be designed and configured in an automatic way based on your business type. So you're an early stage BNPL or payment provider that you need that ledger part, you'll be able to do this as quickly as just a click, onboard, and go. Again, for existing customers who have existing transactions and businesses, I think it's not the commercial sales cycle part, it's the migration or the technology onboarding part that's going to be taking time. And this is very relevant to the size of the customer itself. And this can take anywhere from a month to 3 or 4 months of implementation, but it's not that sales part that it's taking a lot of time. Again, the 2 customers or 2 pilots that we're talking with, again, it took almost a couple of weeks to generate interest, and they are willing to go forward with the process itself.
Okay. And how much have you raised so far?
Again, we've been bootstrapping from private savings and investments. And again, we haven't started officially raising at this point.
Okay, great. Thanks a lot, Sharif.
Sorry.
Go for it, touch it.
Yeah. Hey, Sharif. Yeah. Thanks for the Jameen covered most of the salient questions. What I'm trying to understand is still the use case for the product. So this is targeted at financial institutions, right?
Primarily, yes.
Broadly. But like what would your target customer be? Like when you do launch, like where do you go first? What bridges do you build exactly?
So again, let me put it this way: if we're talking about the fintech segment target as a market itself, any fintech regardless of its business and what kind of target market that they're targeting, a ledger, reconciliation, and settlement is a core functionality of that business. And there's no fintech that works with none of those. So they either build it in-house, or they outsource it, not outsource it, they use existing technologies like the likes of the ledgers for NetSuite or Mifos or Apache FineCard. So those components are essential components for the fintech to actually operate and build on top its own business model. What we're trying to do here, for the early stage ones, is to give them that piece of technology that gives them a head start into going into market. So this speeds up their GTM and their time to market almost by 90% because of that huge piece, and they can focus on their business model and any additional layer of technology implementation that they can put on. Now, for established financial institutions, including either fintechs or NBFIs, they already are facing a lot of problems with the explosive amount of volume of data that they are actually having right now with regards to reconciliation, settlement, the lag between the different data sources, either from payment gateways or payment processors or banks, in order to reconcile data and then automate that workflow. And those are actually facing the same problem as well. Having that piece of technology that can give them real-time access into the transaction movement, how they can audit trail all of that, how they can track that, and how they can source the data and make a lot of use of it is essential for them right now for business continuity and business improvement. And we've seen both sides of the aisle, either the early stage ones or the established ones, and how they're facing different kind of challenges with that kind of piece of technology, which is, again, essential for them to operate.
Okay. Also, since you're currently, I think you mentioned that you were currently bootstrapping, right?
Yes.
So how are you thinking about customer acquisition currently? Like you're focusing on fintechs primarily, right?
Yes, those are the primary target segment that we're focused on, especially because they have clear need. Again, we've seen BNPLs, for example, they're sourcing data from different providers, from payment gateways that they integrate with, from fulfillment providers, from their merchants. And all of these data they have to make sense of, they have to settle, they have to reconcile in order to disperse money for either their partners or collect money from customers. And they have been facing growing pains with that as they grow their business. This saves them a lot of time, a lot of the pain that they're currently facing, and let them focus more on adding more customers, more merchants, more providers. Same goes for, again, the other types of startup, like the mobile banking ones, the SME banking ones, the micro lending ones. This is a core requirement for financial institutions to operate.
Okay, and have you built a sales pipeline yet, or are you still too early in the development phase?
No, I wouldn't call it a sales pipeline. We'll call it an interest pipeline, as we are building the product with customers. What we've spent on is gauging interest from different customers and prospects, and those are the ones we've signed MOUs with, and we're actually building the technology around their specific pain and use case. This is how we're identifying product market fit, through actually building with our customers rather than building something and then trying it out in the market.
And where are these interested parties based?
In UAE and KSA.
Okay, and how did you reach out to them?
We've done business quite over the number of years. We have that trust relation and history. And again, we do address that unique pain that they're currently having. So again, it was just a match made.
Okay. Okay, thank you.
Do we still have time for questions, Hani? Right.
Yeah, go for it.
Thank you, Sharif, for the presentation of all the details about Naya. My question that you've been saying that you have been bootstrapping for quite some time now. So first question would be regarding your runway. And the second question, since you have not been fundraising, what are the criteria of the investors that you would like to be associated with?
Okay, in terms of runway, I've had an allocation of certain personal savings that is there. And again, because I've been in that technology industry for quite some time, I can really manage resources in a very cost efficient way. So I think I can run for almost maybe another 6 to 8 months without the need of actually serious investment. That's for the first part. Now, for the second part is the criteria of the investors that we're looking to. One, being local in the markets that we're targeting. And again, we have two different markets, but again, the primary one is the UAE and KSA. So somebody with local presence, fintech focused, with a network into that target segment space that we're working. So another investor or investor networks that has access to financial institutions, fintechs, banks, and e-commerce players would be a perfect fit for that, because it's not going to be the money, it's going to be more of that expansion pool where we can actually start working with maybe other portfolio companies, or this will help us build our sales pipeline quicker and easier.
Yeah, and you're based where your startup is incorporated?
Southern California, Irvine, California.
Okay, right. Thank you so much.
Tariq, did you have any questions you wanted to cover?
Not really.
Awesome. Well, in that case, Sharif, thank you so much. Great job closing us out. Thank you everyone for joining. Thank you to the investor panel. Thank you to all the founders. Really had a great time learning from you all today, and hope to see a lot of you at a future Viaka event, whether in person or virtually. All right. Have a great day, everyone.
Thank you for having us, Hani.
Thank you, everyone.
Great job, everyone. Bye.
Take care.
Bye,
Bye.
everyone. Bye-bye.